Hello everyone, my name is Nadia, student number 234122026, from Class Act 23A. In this video, I will explain the topic of intercompany acquisitions and investments in other entities, as well as standard costs. Let's start with the discussion on intercompany acquisitions and investments in other entities. In the business world, an acquisition occurs when one company purchases most or all of the shares of another company to gain control. Acquisitions are often done to expand the market, gain new technologies, or increase business efficiency. In accounting practice, acquisitions are recorded using the acquisition method. Under this method, all assets and liabilities of the acquired company are recorded at fair value on the acquisition date. The difference between the purchase price and the fair value of the net assets is called goodwill if it's positive, and a bargain purchase gain if it's negative. Besides acquisitions, companies can also make investments in other entities without full acquisition. If the ownership is less than 20%, the investment is usually recorded using the cost method or fair value method. If ownership is between 20% and 50%, the equity method is used. If ownership exceeds 50%, it is considered control and usually requires consolidated financial statements. Under the equity method, the investor recognizes a proportionate share of the investee's profit or loss. For example, if a company owns 30% of the shares, then 30% of the investee's net income is recorded as investment income. Now let's move on to the topic of standard costs. Standard costs are predetermined costs set as a benchmark or target in the production process. These costs are used as a management control tool and to evaluate operational efficiency. Standard costs are usually determined based on historical analysis, industry comparisons, and future projections. They can include the cost of raw materials, direct labor, and manufacturing overhead. The difference between standard costs and actual costs results in a variance. This variance can be analyzed to determine whether the company is operating efficiently or experiencing waste. For example, if the actual cost of raw materials is higher than the standard, managers should investigate whether it's due to increased prices or inefficient use of materials. Using standard costs is very helpful in budgeting, cost control, and managerial decision-making. By identifying variances in a timely manner, companies can take corrective actions immediately. In conclusion, acquisitions and investments are important strategies for company growth, while standard costs are essential tools for operational efficiency. Understanding both is useful for accounting and managerial decision-making. That's all for my explanation. Thank you for watching this video. I hope it was helpful and see you in the next topic.